Find out from Anurag Singh what he's making of the markets here in India as well as the world. Anurag, firstly, I want to know, how is it that you're working? We have a compulsion here. Both 31st and 1st Jan are working for us. But how come you're not on holiday just yet?
No. So, Aisha, morning. So this time, I mean, look, I think when kids are in high school, everything is governed by what's their schedule, right? So that's the stage I am in. So I think they decide where I am on my holidays, right? Until they get to the college stage. So that's the case with me. But Aisha, yeah, I mean, thanks. So I think this is the last time for this year that we are joining, but always appreciate, the economic times. I've grown up reading ET during my India days, and, always appreciate that I could be a part of this. In terms of Aisha, if I can spend a minute on US markets, I think things are looking, I understand we've had back-to-back 25% and 25% years in 23 and 24, but even next year, the earnings growth projection is a good 14% for S&P. So things are looking very good out here. And, with even the Mag 7 and the rest of the 493 earnings growth is roughly about 15% projection for next year. So, give or take 6,200 on S&P looks like a fair call, except that this broadening out of the rally would continue. So that's the broader call, but otherwise looks like it's all bright blue skies out here, at least in US.
At least in US, not as much in Mumbai given the pollution levels that we have seen of late. But what about 2025? Do you expect that the US outperformance is here to stay, or do you expect a bit of a reversal and money flowing back into India?
So Anisha, I think money should always follow the earnings, and that's what eventually it always does, right? So I just told the picture, right? Look, the last year I understand it was not very broad based within S&P, but next year projections are fairly good. So as long as the 15% earnings come in a market like US in dollar terms, I think it continues to be a stronger market on a relative basis. If I compare with India, Anisha, on the other hand, I think we had some very rocking earnings for the last 5 years. Like, look at Nifty 500. The earnings growth at a Nifty 500 level collectively is also like 16%, 17% CAGR for 5 years in a row. Now, India has seen such periods in the past, but the point is they've not lasted for, I mean, they can't last for a decade, right? So earnings are cyclical. So I think as the earnings estimates for this year come down to like a mid-single digit number, 5-7%, I think Indian market should take a brief pause. In terms of, if I have to just give some levels on this, Nifty looks very fine, very fairly valued. It looks like a 12% return for the last 5 years, and that's what it looks like it can reasonably provide even for the next 5 years. So there's no problem in Nifty. The limited challenge is Nifty, the other 450, right? So if you look at Nifty 500, it has grown with the earnings of like 16-17% for the last 5 years. And if you go till 2019, the average was actually below 11%. So that's a huge conundrum that we face. I think eventually it will move towards the average. And, mean reversion is the ultimate truth in the market. So I think market might take some time, but history tells us that the Indian market always earns more in the large cap space, which is Nifty 50, and not so much in the Nifty mid and small cap space. They broadly give you about less than 10% returns. That's the 25-year history. So let's see if that repeats, but I'm sure it will. Whether it does next year, we can't say for sure, right? Liquidity can keep pulling the market higher, but looks like market needs to follow the earnings, even in the Indian market. Can I just briefly touch the flows, Anisha, since that's a pertinent question?
Yes.
Look, I think if the dollar is giving you 4.5% risk-free, I mean, 10-year yield, it's almost risk-free in dollar terms. Indian market dollar-adjusted returns are roughly 8%. So why would you take a currency risk? So, it's not even Indian market, all emerging markets. So ultimately, I think if FIs just lighten up by about 10% of their portfolio, I think it's a fair call, right? After all, I mean, they're not pulling the entire money out, right? But they have about 800, 900 billion in the Indian markets. They can take 5-10% off any time. And by the way, it's not them. It's ultimately the funds which are mostly active funds and broad-based emerging market funds. They are pulling the money out. So that's the call, Anisha. That's how I see it.
I also want to get your sense on the big event that we are going to see in January is the transfer of the reign or the taking over of the reign by Donald Trump in Jan. Do you believe this is going to be, is it largely already priced in when it comes to the index? Do you believe it's going to be a non-event of sorts when it comes to the US markets, and what impact could it have on markets back home?
Oh, so that's a big event in the sense that market is anticipating a lot of regulatory reforms, right? So this regulatory cholesterol that we saw for the last 4 years which usually is the case with the democratic governments, I think the entire the deal making, mergers, acquisitions, leverage buyouts, all the wild spirits are kind of out there, right? And the next 4 years are likely to be very capitalist friendly and business friendly. Also, I think eventually that converges to be market friendly as well. So I think that's the call, and naturally you see that in the 14% earnings projection for S&P, Shahi. So I think, yeah, that's a good call. The only point is I don't think Trump will be so negative for India, because India is a service exporter. He'll be very tough on goods exporter, which is China and of the likes, largely China. But services, US actually needs these services, right? So it's not that India is on the receiving end of the things. And, if anything, India will be at the gaining end, at least in the Republican administration. That has been the history always, right? India always does better when there is a Republican president. I think this time will not be any different, right? So I'm not too negative on India, by the way, also, right? It will also continue to do well.
Okay, not very negative on India either, but of course that dollar return or the 10-year yield is very attractive in any case, so that needs to be factored in. Thanks so much for joining us today, and here's wishing a very happy new year. 2025 may be better and brighter for you.
Thank you.
Okay, time now.
If you like this video, then like, share and subscribe to ET Now.